Welcome to Future Vision. Today begins a three-part journey to take you from the ground floor to a live ES and NQ trade. We are skipping the fluff. This series is about how the desk actually thinks, moving straight from theory into real-world execution. First, the mandatory disclaimer. This is for education only. Futures are highly leveraged and you can lose more than your initial deposit. Always trade your own plan. With that out of the way, let us dive into the foundations that keep you from blowing up. We focus on two primary instruments, the ES, which is the E-mini S&P 500, and the NQ, the E-mini NASDAQ 100. The ES tracks 500 large-cap U.S. companies. It is the broad market, offering deep liquidity and a steady, weighted movement. The NQ tracks the top 100 non-financial names on the NASDAQ. It is tech-heavy, which translates to faster, more aggressive price swings. Think of the ES as your steady market performer, while the NQ is the high-energy instrument that demands your full attention. Before you risk a single dollar, you must understand contract specifications. It starts with knowing exactly what a tick is worth. On the ES, the minimum price move is a quarter point, or one tick, which equals $12.50. Since 4 ticks make a full point, 1 point on the ES is worth $50. It is a simple but vital calculation. The NQ also moves in quarter-point ticks, but each tick is worth $5, making a full point worth $20. Even though the NQ has a smaller dollar per point value, its volatility means the daily dollar range is often much wider than the ES. Next, we have the micros, the MES and the MNQ. These are exactly 1/10 the size of their full contract counterparts. If you are newer to the game or testing a strategy, trade the micros. There is absolutely no shame in using them. The market does not know your position size. The lesson is identical, but the tuition is significantly cheaper while you build skill. Let us talk about timing. Futures trade nearly around the clock, but the regular US cash session is where the real volume lives. The session runs from 9:30 a.m. to 4 p.m. Eastern. That is when the institutional players are active and the real moves print. The overnight session is also crucial. It sets the table by establishing the overnight high and low, which act as key reference levels. For this series, we focus on the cash session open. If you are new, avoid trading at 3 a.m. when liquidity is thin. Now, let us address the danger of margin. Brokers offer low intraday margin, but this is a trap if you misread it. Low margin does not mean low risk. It is a tool for high leverage, and it can work against you in a single candle. 1 ES point against 10 contracts is $500 gone instantly. Never confuse high leverage with a cheat code. The most important rule is defining your risk in dollars before you enter. Never enter a trade and hope for the best. Professional traders size their position to their stop. You decide the dollar amount you are willing to risk on the idea first. Once you know your dollar risk, you look at the chart to find where your stop logically belongs. The distance between your entry and that stop dictates how many contracts you are allowed to trade. The math must serve the risk. For example, if your stop is 8 points away on the ES, that is $400 of risk per full contract. If your max risk is $200, you cannot trade a full ES. You must drop down to 4 MES contracts instead. Most blown accounts are not the result of bad analysis. They happen because traders use good analysis with oversized positions. Before the market opens, I mark 3 things: the overnight high and low, the prior day's levels, and the value area. These levels are not magic. They are simply zones where large volumes of orders are resting and price is likely to react. Finally, write one sentence before the bell. If price does X, I do Y. If you cannot say it in one breath, you do not have a plan. In part 2, we put price on the screen. I will show you how I read the ES and NQ and the specific setups I look for. Then, in part 3, we go live. We will execute a trade together in real time to see these concepts in action. If this tightened up your game, subscribe so you do not miss the next episode. This is Future Vision. Trade your plan.